What's up, everybody? My name is Jason, and welcome to Small Biz. In today's video, we're going to talk about the 80-20 rule and how it applies to investing and trading the stock market. Because the obvious question of this day is, with 127-2 track record over the last 12 months, why in the world is there so much hate? All that and more coming right up. All right, ladies and gentlemen, happy Tuesday. Last trade on the Q's, 480 3/4. I want to start off by thanking and congratulating more than 400 strong inside of our private Discord community for having the balls, the cojones, the guts, and shout out to the ladies who are tough as nails for putting a huge chunk of their retirement money that they're not going to need for at least 5 or 10 years into the stock market. We bought the SPY as low as 510, the Qs as low as 421, and the IWM at 197. And according to my third grade math, that's at least a 10 to 15% upside. While most of you, 99.9% of you that have been sitting there with your unlubricated motherfucking thumb up so far up your ass, you've been scratching your nose, watching me for the last 12 months, have probably lost your ass. And speaking of losing your ass, I am going to put the nonsense, the hate, as I called it at the open, to rest, to bed, because I've heard enough, right? And if I had to do this video last night, I probably couldn't have got it done with less than 57 F-bombs. So if you do have small children in the room, you might want to ask them to leave, because I'm going to explain not only what has happened over the last 12 months, our first year ends September the 1st, but what you can do, most importantly, to get yourself out of the fucking ditch. If you're one of those folks that are sadly choking on Mullen at a quarter, when I told you to sell it at 18 over a year ago, if you got sucked into the rebuy of Kraken like I did, but somehow find yourself down 40, 50% across the board, there's a solution. And I'm going to share it with you over the next 10 or 15 minutes. And it doesn't even involve joining us. You see, folks, forgive me while I scratch an itch. I've come to the realization that social media is largely a graveyard of keyboard warriors. I have flat out given you hundreds of videos, dozens of examples. Told you to buy the Kraken at a nickel, it went to 60. Yeah, I bought it back. Big mistake. But I also told you to buy Meta before it went up 5x and Tesla before it went up 3x. And I told you about a month ago to buy Sophie at $6.16. You could have sold it at 8, bought it back again at 6.5, sold it again at 8, bought it back. And you certainly could have went over to shopsmallbiz.com by now and signed up. Get a Discord if you don't have a Small Biz Premium if you do. But I know from experience now that you're not going to do that. And I quite frankly can't figure out why I come in front of the camera every 2 or 3 times a week to spill my guts, only to have people say I'm a con man, I'm a swindler, and I belong at the bottom of the ocean. I haven't figured that out yet. But I'm also the kind of guy who's willing to tell you I haven't figured it out yet. Yes, it's true. 127 wins, average gain 32%, 2 losses. We took our second loss last night. Got out of a biotech stock at about, let's call it 35 cents. Took a 37% hit. That goes with a 3% hit almost 10 months ago in BENF. So you got 2 losses minus 20% average. You got 127 fucking gains, 50 in the last 6 months for an average gain each time of 32%. So your 10 grand should have went to at least 60 or 70,000. And maybe if you have your thumb up your ass and you're not listening to me with respect to index funds and ETFs, yeah, maybe you were cut in half. But there's at least 427 if my eyes are not deceiving me. The vast majority of which have up to 80% of their money in ETFs and index funds. It not only smooths out the volatility, but in case you haven't heard the fucking news by now, you have a 10% chance to beat the S&P 500 each and every year. That includes fund managers. Ego and emotion get in the way. Just like a couple of weeks ago on the Japanese yen carry trade fiasco, which was probably manufactured by the Japanese government to get the correction over with before the election. Most people, dumb retail, the same ones that have been sitting in $6 trillion worth of cash for years now, panicked. Oh my God, the sky is falling. Oh my God, it's over. Wrong. We are in the strongest secular bull market in human history. In 2017, when I started telling people put about 80% or thereabouts, depending on your risk tolerance, into index funds and ETFs, we are about to have flying cars and trips to motherfucking Mars. And when I was buying the Qs back in 2017, around $50 or $60, that was before almost a 9x in the ETF. Is it going to 9x again in the next 10 years? Probably not, but at least 4 or 5x before the bull market is over, which is driven by demographics, the millennials and Gen Z, aka X. You may as well include them as well. They're twice as large as the boomers. Demographically, this is 1989. And if you know anything about the 90s, when I was a licensed broker on Wall Street, especially the back half, it was in fuego. The economy was on fire, but it was not without at least a dozen 10% plus corrections from 95 to the dot-com bubble burst in 2000. We just had one. And if you were inside the Discord, and I'm going to tell you what you got to do now, whether you fucking join us or not. Every year you're going to get a 10 to 15% pullback, a correction, if you will, even if it's a raging secular bull market like this. You usually get 1 or 2, 3 to 4 percenters. And then usually in the spring, fall, September being the worst month of the year. This year, it just happened to be in August. And again, I think it may have been manufactured to get it out of the way for the election. You've got your chance. We had massive amounts of cash that we were buying the IWM at 162 last October. I won't touch that for 10 years. Last trade, 212. 3 months ago, I said at 412 on the Qs, nailed it to the fucking day. What a surprise. Add some more. And then when we were coming down, yeah, we started buying at 460, a little bit at 455, 450, but we doubled and tripled up and got our average around 435 on the Qs. Last trade, 481 on the nose. We don't need that money for 5 or in my case, 10 years. And because of demographics, buying power twice as large in spending and investment power as the boomers in 89, AI, which is arguably 2 to 3 times more powerful than the internet that Al Gore invented, which was followed by, the great industrial revolution, the advent of the automobile, and in particular the telephone and the build out post-World War II of industry in this country. And because we have massive corporate buybacks, much less supply, huge productivity gains that are coming as a result of AI, which is just in the first inning, maybe, of a 10-inning ball game, or 9 innings in a baseball game. Fuck you. Right in the ass. This party's just getting started. So ask yourself, if I'd have taken 10 grand and gotten in and out with Jason 127 times for an average of 32%, and I'd only had 2 losses, and we'll do a shout out at this point to the haters who are saying, yeah, but what about the drawdown in the Kraken and that other biotech stock that did the way below market offering? All right, I've got 2 other significant drawdowns right now. My average on CRKN as a result of adding small at a little under $2 a share recently is $8 a share. But if I sold both of them, we'd finish out the first year 127-4. And I'm going to give you a crystal clear example of how you can get yourself out of trouble right here and now and transform your life forever fucking more. Let's assume, to keep it simple, stupid, you have $10,000 to put in an account that I think should be 80% index funds and ETFs, 20% trading. If you're real aggressive like me, 65-35. You always want more indexed to the market than you do trading. I've blown up 3 or 4 books in the last 30 years. They've gone to smithereens because I took too much risk on margin or with options or with penny stocks or all the above. And as good as I am, and I'm as good as anybody else that's out there putting their fucking nuts in the guillotine every damn day inside of a Discord and in front of everyone on the internet, I can't handle the emotional roller coaster of having all my money in penny stocks, and neither can you. For me, it's 65-35. For most of you, it should be 70 to 80% indexed. So let's assume you signed up today at shopsmallbiz.com. You must put cash and or index funds and ETFs, whether you buy them or you transfer them in. Now, ideally, you should have done it a week or two ago at the lows as a result of the Japanese carry trade fiasco. But even if you don't, cash. $8,000 worth of cash or transfer in an equal amount of ETF or index fund. It must be in the same fucking account. And to the guy out there who said, oh, you're destroying lives with your stock picks. First of all, fuck you, I am. How is that possible with 2 losses, 4 in total if I got rid of the big drawdowns right now? We have, what is that? 35 times as many wins as we do losses. For every 35 trades or thereabouts, we take 1 loss on successful gains. It doesn't take a fucking rocket scientist to figure out that, gee, if he's right 35 times for an average gain of 32%, and then we get cut in half, let's assume, and we're not, once, you're still way, way, way ahead of the game. And then the other $2,000 in that $10,000 80-20 mix example, you have no more than 7, this many, core holdings inside of our trading system. Color-coded. It used to be green buy, yellow caution, red was hold, but people were getting that confused with sell, so I changed it to blue. Be rock solid and hold the fucking stock and quit being a pussy. And you'll get a notification when I pull the trigger. You don't have to, and this is a hard lesson I've had to learn, you don't have to get out when I get out or get in when I get in. We got plenty of peacockers, for example, that hung on to NVIDIA. Got up to 130. I got out at 114. Now, what I bought with the money is up even more than NVIDIA is, but that doesn't matter to these motherfuckers. Some of them live, at least a couple dozen more that'll be out the door within the next month. They live to prove me wrong. We don't see them for months at a time and then, oh, I got out of NVIDIA today. Thanks, Jason. Really? In closing, if that's not enough, let's assume you showed up today. And let's assume, for argument's sake, you bought the all-time high in the fucking market. You took $8,000, you bought the Qs at 503, you bought the SPY at 570, and on that run a couple of weeks ago, when the IWM broke out, you paid $228. Where is the market right now? It's off approximately 5% from all-time highs if you average those 3 indices across the board. So your $8,000 minus 5% is minus 400. Let's call it minus 500. Suddenly, if you paid the all-time fucking high, your $8,000 is worth $7,500. And let's assume that the $2,000 you had in trading, again, in 7 stocks, 10 to 15% per idea, got cut in half. Your 2,000 became 1,000. That adds up to 7,500 plus 1,000 is $8,500. In other words, even if you didn't listen to a fucking thing I said, and you didn't participate in 50 wins in the last 6 months, 127 in the last year, you paid the all-time high for the index, and what you currently have now has been cut in half, and it hasn't. You're still only down 15% on paper. I want you guys and gals to watch this video about 15 times. The reason why Jesse Livermore stuck a gun in his head and blew his fucking brains out, one of the greatest, if not the traders of all time, and he wrote about it before he killed himself in a swaggy hotel waiting to go into dinner, and there's a picture of him sitting there in a trench coat looking all dapper, but he was depressed as hell. 5 minutes later, he fucking blew his head off. And it was because he never took the time or had the discipline to have treasury bills back in his day, corporate bonds, or cash, or in this case, index funds and ETFs, which average about 10 to 12% a year since 1900. He could not handle the volatility. It wasn't that he didn't know what he was doing. It's not that I don't know what I'm doing, but you lay awake at night. You think, oh my God, why did I do this? How come I didn't do out of that? You become an awful husband, an awful parent, an even worse business person. And in some cases, sadly, you end up taking your life. And we've tragically heard stories of people that did that with Mullen. And I even saw one not too long ago with MCOM. What is that, like a penny now? You're never going to be in that situation with us. And I know you hate to hear this. 2 losses in a year. 4 if I blew out of the Kraken and one other stock were down. The other stocks we have are doing just fine. Put most of your money in index funds and ETFs. Once a year when you drop at least 10%, double down. If you're dollar cost averaging into an index fund, you double up. Your $100 a month becomes $200 a month. And if you're in there, I can hold your hand. I can slap your fucking ass around if necessary. And there's 400 people that are in the same boat. We rise, and lately in the last couple of months, we fall together. But I can promise you, this too shall pass. And all the bitching and moaning that we've had to endure in the last 60 to 90 days of people, oh, I can't believe we got into that stock. Mark my words. Mark my motherfucking words. When the Fed starts cutting and we get into the fourth quarter beyond the election, regardless of who wins, and the IWM reasserts itself, it's starting to do right now, that's going to translate to, man, I can't believe we sold that stock. And until next time, ladies and gentlemen, that'll give you something else to bitch about. Until next time, always remember, I love you. And I don't know why I have to say this. Go fuck yourself.